What if I told you that every single day, over $6 trillion moves through global financial markets, and most of the people trading it started exactly where you are right now, with zero knowledge, zero experience, and a whole lot of questions? The problem isn't that trading is hard to learn. The problem is that nobody explains it properly at the beginning. You search online and you get hit with jargon, leverage, spreads, candlesticks, moving averages, and before you even understand the basics, you're already lost. That stops today. In the next 9 minutes, I'm going to walk you through exactly what trading is, where it comes from, the different types you need to know, and most importantly, where you should start. Let's get into it. At its core, trading is simple. It's the act of buying and selling something with the goal of making a profit. Now, that something could be stocks, currencies, commodities like gold or oil, or even cryptocurrencies. But the principle is always the same. You buy low, you sell high. Or in some cases, and we'll talk about this later, you sell high first and buy low after. That's called short selling. Trading has existed for thousands of years. Ancient civilizations traded spices, silk, and metals. Modern trading just moved all of that onto screens and milliseconds. But here's what makes trading different from just buying something and waiting. Trading is active. A trader is constantly analyzing, making decisions, and managing positions, sometimes within minutes, sometimes within days, rarely longer than a few months. And here's the key concept you need to understand early. Price moves because of supply and demand. When more people want to buy something than sell it, the price goes up. When more people want to sell than buy, the price goes down. That's it. Everything else in trading, every indicator, every strategy, every news event, is just a different way of trying to figure out which direction that balance is about to tip. Simple concept, not always easy to execute. But that's why we're here. Before we go further, let's clear up one of the biggest confusions beginners have. What's the difference between trading and investing? People use these words interchangeably, but they're actually very different. Investing is the long game. You buy an asset, say shares in Apple, or an index fund, and you hold it for years, even decades. You're betting on long-term growth. Think Warren Buffett. Slow, steady, compound returns. Trading is the short game. Traders are looking to profit from price movements over days, hours, or even minutes. They don't care as much about what a company does in 10 years. They care about what the price is going to do in the next few candles on the chart. Neither approach is better. They just serve different goals, different personalities, and different risk tolerances. Some people are natural investors, patient, long-horizon thinkers. Others are natural traders, analytical, disciplined, comfortable with faster decision-making. The important thing is to know which one fits you, and to never confuse the two while you're in a position, because that's how losses grow into disasters. Now let's talk about the types of trading. There are 4 main styles of trading, and each one has a different time horizon and a different approach to the market. Number 1, scalping. Scalpers hold trades for seconds to minutes. They're looking for tiny price moves, and they make many trades per day. This requires extreme focus, fast execution, and is usually not recommended for beginners. High intensity, high stress, high skill requirement. Number 2, day trading. Day traders open and close all their positions within a single trading day. No overnight risk. This is what most people picture when they think of trading. Someone staring at multiple screens, charts everywhere. It requires discipline, a solid strategy, and strict risk management. Number 3, swing trading. Swing traders hold positions for days to weeks. They're looking for swings in price, the natural up and down movements that happen on medium-term charts. This is often considered the most beginner-friendly active trading style because you have more time to think, analyze, and make decisions. You're not rushing. Number 4. Position trading. Position traders hold for weeks to months. This is the closest style to investing, but traders in this category are still actively managing, based on technical and fundamental analysis, not just set and forget. Now which style is right for you? If you're just starting out, I'd suggest starting with swing trading. The slower pace gives you time to build your skills without the pressure of split-second decisions. But regardless of style, you need to know what you're actually trading. Let's cover that next. Traders can participate in many different markets. Let me break down the most common ones. Stocks. Shares of publicly listed companies. When you buy Apple stock, you own a small piece of Apple. Stock markets are open during set hours. In the US, that's 9:30 a.m. to 4 p.m. Eastern Time. Forex, foreign exchange. This is the largest financial market in the world. You're trading currency pairs. For example, the euro against the US dollar. The Forex market runs 24 hours a day, 5 days a week. Crypto. Digital assets like Bitcoin and Ethereum. These markets never close. They run 24/7, 365 days a year. High volatility, high opportunity, high risk. Commodities. Things like gold, silver, oil, and natural gas. These markets are often influenced by global events, supply chains, and geopolitics. Indices. These track the performance of a group of stocks, like the S&P 500, which tracks the top 500 U.S. companies. As a beginner, I recommend picking one market and focusing on that first. Don't try to trade everything at once. Master one thing first. All right, let's talk about charts. Because if you want to trade, you need to be comfortable reading them. The most common chart type is the candlestick chart. Each candle represents a specific time period. Could be 1 minute, 1 hour, 1 day. Each candle shows you 4 things. The open, where the price started during that period. The close, where the price ended. The high, the highest point reached. The low, the lowest point reached. A green candle means the price closed higher than it opened. Buyers won. A red candle means the price closed lower. Sellers won. The thin lines above and below the candle body are called wicks or shadows. They show how far price moved before coming back. Now, then why does this matter? Because by reading candles, you can start to understand who is in control of the market at any given moment. Are buyers strong? Are sellers pushing price down? Is there indecision? Chart reading is a skill that takes time, but the fundamentals are simple, and every single successful trader started exactly here. Okay, so now you know what trading is, the types, the markets, and the basics of charts. The question is, what do you actually do next? Here's my honest advice as someone who has been through the beginner phase. Step 1, paper trade first. Paper trading means practicing with fake money in a simulated environment. No real risk, pure learning. Most platforms let you do this for free. Step 2, learn one strategy. Don't collect 50 strategies. Pick one simple setup and study it deeply. Understand why it works. Step 3, keep a trading journal. Write down every trade. Your entry, your exit, your reasoning, your emotion. This is how you improve. Step 4, study risk management before you touch real money. The golden rule, never risk more than 1 to 2% of your account on a single trade. This is what keeps you in the game long enough to learn. And for all of this, you need the right tools. The one platform every trader I know uses is TradingView. It's the most powerful charting and analysis platform out there, and you can start completely free. If you want to unlock premium features, like more indicators, faster data, and multiple charts, you can upgrade to a paid plan. And here's the good news. If you sign up through the link in the description or the pinned comment below, you'll get $15 off your first subscription. The link is right below this video. Check it out. That's it for today's video. You now have a real foundation, not just buzzwords, but actual understanding of what trading is and how to begin. In the next video, we're going to go deeper into how to actually read charts and find your first trade setup. If this helped you, subscribe, because we're just getting started. See you in the next one.